Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's action in automotive technology deals. I'm Steve Greenfield from Automotive Ventures. Thanks for joining us. So let's dive right in. What the heck's going on with Carvana's stock price? There's no doubt that COVID-19 has accelerated more consumers to online car buying, and in parallel, investors' interest to technologies that enable consumers to either buy or service their vehicles online. This week we received a couple of interesting signals from Carvana, signals that have really buoyed their stock price. In a rare move prior to the end of the third quarter, Carvana communicated that they expect a record third quarter across several metrics, reflecting how well positioned the online vehicle retailer has been vis-a-vis the coronavirus pandemic's impact. Carvana said Tuesday that it expects to post company records in retail vehicle sales, total revenue, total gross profit per vehicle, and profit margins in this third quarter, which wraps up at the end of this month. The company, which has not posted a net profit since going public in April 2017, said it also expects to be approximately break even in EBITDA, or earnings before interest, taxes, depreciation, and amortization for this third quarter. Shares of Carvana closed Tuesday's trading up 30.6% to $226.83. Later that same day, Carvana said it planned to borrow an additional $1.1 billion. Only $600 million of this new debt will be used to retire existing debt. The additional $500 million raised will be put on their balance sheet for general purposes. To put Carvana's market capitalization, currently at $37.3 billion, into perspective, you'd have to add up all of the other public retailers plus Vroom's $6.7 billion to match Carvana's market cap. I'm not really sure if that makes sense to me, but I'll leave it up to you and the Wall Street analysts to sort that out. Shifting gears, we got big news from California this week that will add even more momentum to electric vehicle manufacturers. On Wednesday, California announced plans to ban the sale of new gasoline-powered passenger cars and trucks starting in 2035 in a dramatic move to shift to EVs and reduce greenhouse gas emissions. California Governor Gavin Newsom told a press conference that the state was committing to a firm goal to phase out the sale of new gasoline-powered vehicles by 2035 and was encouraging other states to take similar action. Newsom's order labeled the elimination of gasoline-powered vehicles a goal and a target, after his office said earlier his order would require the sale of nothing but zero-emission passenger vehicles starting in 2035. In any case, the move would be the most significant to date by a U.S. state aimed at ending the use of internal combustion engines for passenger travel. California is the largest U.S. auto market, accounting for about 11% of all U.S. vehicle sales, and many states choose to follow suit and adopt its green vehicle mandates. California said it was joining 15 countries that have made similar pledges, including Britain. If this type of regulation is adopted by additional states, we could see further support of current high valuations of electric vehicle manufacturers. And speaking of electric vehicles, it seems like just about every automotive company in the world is trying to keep up with Tesla. To keep it in perspective, Tesla has only just over 1% market share in the US, but you wouldn't know it by the disproportionate amount of media coverage they get. During its Battery Day event on Tuesday, Tesla CEO Elon Musk announced that the automaker plans to build a $25,000 electric car, something that would make electric vehicles far more affordable for the average American. Tesla's Model 3, in comparison, is its least expensive model currently and retails for just under $40,000. And at the high end of the market, Tesla announced that they are now taking orders for the new 3-motor Tesla Model S with Plaid mode, a version capable of producing 1,100 horsepower. This car will be able to go from 0 to 60 miles an hour in under 2 seconds and run a quarter mile in under 9 seconds. Costing about $140,000, the Model S Plaid will have a top speed of 200 miles an hour and will be able to go 520 miles on a full charge, according to Tesla. And while on the topic of electric vehicles, there has been more action this week from the ongoing saga of EV manufacturer Nikola. Last week, we reported that the Securities and Exchange Commission was examining Nikola Corporation to assess the merits of a short seller's allegations that the electric truck maker deceived investors about its business prospects. We now understand that the Department of Justice has joined that investigation. Just days before the allegation was made public, General Motors invested $2 billion into Nikola, taking an 11% equity position. The deal committed GM to manufacturing the startup's debut electric pickup called the Badger. This week, things seem to have gotten worse for Nikola. First, Nikola's former executive chairman and founder Trevor Milton resigned on Sunday. Then, talks between electric truck maker Nikola and several potential partners, including BP, to build hydrogen refueling stations have stalled. Other potential partners have been reluctant to move ahead with negotiations amid the heightened scrutiny of the company. Nikola's shares sank 26% to $21.15 in the stock market on Wednesday. Shares are down 73% from their peak of almost $80 per share back in June of this year. So that's your weekly Friday 5, a quick wrap-up of the big deals in the automotive technology space over the past week. It's an exciting time for automotive technology companies, and we should see a lot of M&A activity over the remainder of the year. Please feel free to contact me anytime. Here's my email address, and I look forward to discussing the industry deals with you. Thanks for tuning in to CBT News for this week's Friday 5. We'll see you next week.
Thanks for joining us for another edition of the Friday 5 with your host, Steve Greenfield.